Good morning, Paul Georgie from Allendale. It's January 2nd, first trading day of the year, and it's Friday morning. So markets have not opened yet. They will open at 8:30 Central Time here in the grains, 8 o'clock in the livestock. The news out this morning, export sales right in line with what the trade was expecting. Soybeans at 611,000 tons. That was within the range. 354,000 tons for wheat. They were looking for 200 to 400, and corn came in at 895. That's just slightly above the trade estimate where they had 600 to 800,000 tons was expected. We've got China and Japan closed today yet for the holiday. Weather markets look to be on the negative side for row crops, corn and soybeans, due to rain across Argentina and Brazil and South America. And over the next few days, looks like that should continue and cover a larger area with no extreme heat in the forecast. So should weigh on the market a little bit there. However, in the U.S., the cold temperatures is forecast here for early next week into middle of next week for the wheat areas. Could provide some support in the wheat here, in the hard wheat and in the soft wheat in the at the Chicago Board of Trade. The European wheat market under pressure this morning. Started out with the follow-through pressure from the Chicago Board of Trade prices on Wednesday. However, prices continue to slip there, and that could cause further weakness here as we open up the Chicago Board of Trade wheat at 8:30. Some of the other things that are going on, we're continuing to monitor the ethanol margins, showing some very good margins right now with the corn prices going down, DDG prices going up. However, when we look out a month or two, those margins get to be very ugly and some of the worst margins we've seen in a long time. The dollar this morning is put in an excellent performance. The strength coming off of comments out of the European Central Bank that they will continue to hold interest rates low for a period of time in order to continue to control their financial situation. That's giving some support to the dollar and setting new highs and prices that we've seen in the dollar not since the March of 2006. So that could put some headwinds into the grain markets as well as they open here today. In the livestock trade, we had some good cash trade on Wednesday. Nebraska posted a 166 to 167 for some cattle. That's $4 to $5 higher than last week. Cutout values continue to strengthen. We had choice up 170, select up 183 on Wednesday. However, pork continues to struggle. We've got pork cutout values were down $2.33. Supplies of hogs due to the increasing numbers and because of the reduced slaughter here the last few weeks, have packers being able to buy hogs cheap going into this full work week next week. And we'll have to see how those numbers are handled and how the product moves through the retail chains. But those are things that are being monitored very closely. From a chart perspective, the cattle market had a bit of a reversal on Wednesday. We would think that due to the strong cash prices that we could see some turnaround there today. The hog prices are in a trading range. Watch out for a breakout on either side of that range and stay in touch with Allendale's research as you go forward here into the new year. And one more reminder, we do have the Allendale Ag Leaders Conference coming up here at the end of this month, January 27th, 28th, and 29th. Go to our website and get signed up for that. One session with Drew Lerner will be live only, so it should be good looking forward into 2015, as it right now stacks up to be a very interesting year, and we'll need to be making some good marketing decisions as we move forward. So stay in touch with Allendale's research, and if you got any questions, don't hesitate to give us a call here at 800-262-7538. We wish everybody a very successful trading day, and I'll talk to you on Monday morning. Thank you.